Hello and welcome. Flat market. We traded in a very tight band of around 110 odd points on the Nifty index. When you're looking at the movers on the Nifty, you saw SBI as the top loser, 2.4% lower, and you also had an Eternal and ITC, which were top drags on the index. Titan though, post the numbers, 3% higher on Titan. Tata Consumer up 2.5%. Bajaj Finance up, Shriram Finance also up around 2 odd percent. Grasim was up around 1.7. So you saw some decent moves there. When you're looking at the Nifty mid-cap and small-cap indices, trending in the green, at least the mid-cap index up half a percent thereabouts. The small-cap index was absolutely flat, closed with a slight negative bias. And that's how it shaped up. In terms of sectors, and essentially, when you're looking at the sectors, you've got realty as the top gainer, 1.4% higher. PSU banks were the top loser, 1.7% lower. Within the PSU banking pack, of course, SBI was one of the critical losers. But Bank of India, Canara Bank, Union Bank were just some of the others which were laggards in trade today. Defense index was the other one, 1% or thereabouts lower. Outside of these three sectoral indices, realty, PSU bank and defense, all the sectoral indices traded in a very tight band of plus to minus third of a percent, so 0.3 odd percent plus minus. That's how we've played the day essentially. But Sajid, over to you with regard to the FNOQs and what the cash segment actually indicated in the day of trade on Monday.
It's pretty much flat actually. If you look at the total turnover of the NSE cash segment, and interestingly, the total turnover for that cash segment was 1,000 odd crores. So the low volume day continues on the NSE cash segment for the, I think, sixth day. Last week we have seen turnover of between 1,100 to 1,200 crores on a daily basis in the last 15 minutes of trade. Today it's around 1,000 odd crores, 1,003 crores. That's what the number is. But what we saw was some bit of a jump coming in some of the real estate stocks there. M&M was active in today's trade in cash, aside of Reliance, ICICI and HDFC. So that was one pack which is there. But look at what happened on the Nifty NSE FNO. Nifty 50 flat 0.05% up there. The open interest is up nearly 0.9%. We've seen some shorts getting built in today's trade. And we tried moving towards the 24,600 level, but then came off that and stayed at almost a flat level. The Nifty Bank, again, if you look at it, it ended lower in today's trade, 0.1%. It's flat as we speak, but the underlying current was basically against the PSU banks, where we have seen some short positions getting built. Private sector banks like HDFC, which saw some long positions in the morning, we saw that reversing towards the end of the day. And ICICI and Axis and Kotak and IndusInd were the only private sector banks where we saw some long build-up coming in. So PSU banks all seeing some short build-up coming in today's trade there. If you look at the gain, call and put writing, we started the day on a note of call writing being active, but towards the end we saw that there is a lot of put writing that came in, and that's what is driving this market as well, trying to hold the market at this level as you speak. Open interest distribution shows that 26,600 is still a small resistance coming in, but the support is at 24,500. And the base coming at 24,300 there. So a narrow band of 300 to 400 points for the Nifty. Future gainers, Hitachi is seen an 11% jump in today's trade after the earnings. Paytm up on the back of a Bernstein upgrade, 10% up in today's trade. MCX is seeing a 4% jump in today's trade there. And Bharat Forge, the numbers a bit disappointing, margins a little under pressure it seems, and some extraordinary charges were there in the P&L, so down 7.6%. PFC and REC, the twins, are down over 6% and 7% respectively. But Open interest gainers included Amber, where we saw the open interest up nearly 30% to 29% to be precise. Bharat Forge saw a late pickup in open interest, short build-up coming up, and PFC saw nearly 20% jump in open interest. In the losers pack, you had Keynes Tech after little disappointing earnings. There's a long unwind which is coming in. BSE short covering seen 8% fall in open interest for BSE, and Patanjali Foods saw a short covering of 2.84%. So finally, the market ending on a flat note. Harsh.
Yeah, absolutely. Flat, slight positive bias at close. Let me go across to Meryl. She's here with the cues you want to keep on your radar for Tuesday's day of trade.
Right, so these are all of the major cues that you need to keep on your radar leading up to the trading session on the 11th of August. In India, it's the weekly Nifty expiry day, so watch out for volatility that's going to be shaping the market. And in terms of earnings, while there are no major Nifty companies set to report their results, we do have a lot of broader market names. These are the ESAB India, IFCI, Venky's, Gujarat Gas, Zydus Life, Bata India, and many other names which are going to be in focus on the back of their first quarter progress. In terms of the corporate actions and board meetings, we've got Ashiana Housing, JNK Bank and Manappuram Finance, the boards of which will be mulling a fundraise, while SP Apparel's board mulls a stock split. In terms of the primary markets as well, do watch out for Milky Mist IPO set to open on the exchanges, while Technocraft Ventures and Leap India IPOs are going to be closing. So these are all of the names which will be in focus in the trading session on the 11th of August.
Okay, thank you so much for that, Meryl. Let me bring on board Rajesh Palvia to take this conversation forward. He needs no introduction from Axis Securities. Rajesh, great having you. Rajesh, it's been sluggish, right? I mean, we saw a couple of days where we saw the Nifty hitting 24,600, but thereafter we've again gotten into that tight and narrow band in which we're trading. What next? What are the levels you're looking out for? Can we break out?
Yeah, hi Harsh. Good afternoon. So,
Very good afternoon.
looking at the data setup, it looks like we are likely to remain in the tight range only. If we go with the data, today's data, the most of the call writers were confident at 24,600 strike and 24,650 strike. So these may act as a major supply zone on the call writer front. But on the other hand, put writers were looking confident at 24,500, 24,450. So I think this 200-point tight range we may witness for some more couple of days before any decisive breakout on either side. But the broader market stock specific action is clearly attracting traders as well as short-term investor in the market as stock specific action is taking place. Though we are on the last leg of this earning season, so a lot of volatility is taking place based on the earning outcomes. So I think the major interest is on the stocks front. Index trade is looking like range bound activity is going to takes place. But still, if we analyze the near term, short term structure is still showing sign of strength. Decline towards 24,500 or closer to that should be used as a buying opportunity. Keep your stop loss around 24,450 till these levels are intact on the downside. 24,450, I think one should try to buy minor decline, and I think there is a possibility that we may see a breakout on the higher side. But for tomorrow's weekly expiry, I think it's going to be again tight range. We may see a very 50 to 60 point kind of move in the tomorrow's session also for Nifty, because data is clearly indicating that. And Bank Nifty is still not able to take out the major supply zone, though post SBI earning again there is a profit taking in the stock from higher levels. So Bank Nifty again failed to cross 58,000 58,100 supply zone. So I think till these levels are not taken out, I think Bank Nifty may also consolidate further. On the downside, 57,400, 500 are the important level to watch for on the downside. So range bound activity for both the indices is expected in coming trading session till the decisive breakout not takes place.
Rajesh, how do you look at some of the financials, ICICI Bank, Bajaj, Shriram Finance?
I think NBFC space is showing sign of confidence. Stock like Shriram Finance, Cholamandalam Investment, Bajaj Finance, all these stocks are holding the ground at higher level. And especially in today's session, also we have seen these stocks have attracted buying interest. So I think NBFC as well as capital market related stocks can continue furthermore upside. Shriram Finance, we hold our bullish view, the kind of outperformance which we have observed in last couple of months from this stock. I think there is a potential to extend gain if it continues to trade above 1100 mark. I think this stock has potential to extend gain towards 1180, even 1200 kind of zone. Again, the same we could see the same upward momentum in Bajaj Finance also. Again, stock able to trade around 1100 marks. So I think any move beyond 1100, 1110 can attract more buying action in Bajaj Finance, and we could see further higher level to 1150, 11 1200 kind of zone also. NBFC basket is looking promising. So I think from banking and financial, if anybody wants to buy NBFC space can be looked at for near term trading perspective.
And in the real estate space, we saw good activity coming into the last half an hour of trade on Oberoi, DLF, and Lodha.
Yeah, so after a long consolidation, some of the real estate stocks, again, trying to recover from the lower level and looking at the strength on the near-term chart, we believe that the kind of support DLF has taken the from 50-day moving average and now trading around 20-day moving average. Stock is now negotiating with its falling trend line. So any breakout above 665 in DLF can attract more buying action, and then 685 to 690 would be the next target. Keep your stop losses around 648 for DLF. Again, Lodha is also showing the similar kind of behavior. Looking at the structure, we still wait for the breakout about 1245. If any breakout comes about 1245, I think here also we may see some buying interest, and then stock can extend again towards 1300. So some buying interest has been visible in real estate stocks. So I think one can focus on this space for tomorrow's session also. Some follow buying action can continue further.
Rajesh, your top picks for Tuesday's day of trade for our viewers?
Yeah, so two stock idea both on the buying side, and as I mentioned that we are holding bullish view on the NBFC space, so that space one can look at. But two stock idea where we have seen a breakout. One is JSW Energy. Here, if we look at the structure, stock managed to give breakout of multiple supply zone on the daily chart. Looking at the strength on a weekly as well as on the daily chart, we hold our bullish view and expecting target of 595. So JSW Energy is buy with stop loss of 570. Another stock where we are focusing is APL Apollo. Again, after a correction, stock has given a breakout on the weekly chart of falling channel. And looking at the long built up in the data, we hold our bullish view, and we believe that this stock can extend gain. Expecting target of 2060 on the downside, 1985 needs to keep as a stop loss.
Rajesh, thank you so much for joining us. Just very quick question. I see Axis Direct at the back. Has there been a rebranding?
Yeah, Axis Direct is our rebranding.
Okay.
Yeah, so the name is Axis Securities Limited, but yes, now we are promoting this Axis Direct as a brand for retail.
So got your note with regard to Q1 earnings. I hope to discuss that with you at some point of time this week and get a sense of what you think is standing out in this time's earnings. But thank you so much for joining us.
Yeah.
All right, let's cut across. There's Walkhardt's call, which is on. Let's cut across, quickly listen in, slip into a break, come back, talk more. Stay with us.
And the fact that we didn't have many antibiotics, hardly few, in last 30, 40 years. So we thought the academy will help to bring a current knowledge, current practices, and a correct way to use an antibiotic. Because sometimes early usage is desirable, sometimes right time usage is desirable. and what kind of indication it is to be used. So it's a more of a dialogue and deeper understanding of the whole process of management of infection.
So, do you also use the scientific studies, or bring in evidence for use of antibiotics, I mean, as part of this academy?
Yeah, it will have two or three, several factors. One would be there would be sharing of some of the experts and practitioners from India, from worldwide, also sharing some of the new scientific literature developing in this space of use of antibiotic in infection.
Sir, my last one, sir. I mean, in India, are we done any studies, sir? I mean, like, is there any scientific evidence that is generated on this this whole antibiotic resistance, or do we need more studies to understand, what are the antibiotics that have, become, I mean, kind of, unusable? I mean, like, any studies?
There is a stewardship program for use of antibiotic, which are currently there in India and Western countries like US, Europe. And these are evolving and they bring updated version from time to time. So this is something what we would like to share. Because and this is the initiative we are taking, because when a doctor is there, he manages so many complexities while treating a patient. And infection is there, but he might be working on many other areas for the treatment. So we want to bring this new understanding, which is updated understanding and science-based evidence for use of antibiotic and treating the patient with the right antibiotic for the right purpose.
So
Welcome back, and we're joined by Piyush Pandey at this point. He's Senior VP, IT Lead Analyst at Centrum, who also tracks Telecom as part of the various companies he tracks. Piyush, great having you. Piyush, we wanted to concentrate the conversation today more on the telecom space and try and understand as to what's happening with regard to ARPU. The strength of the ARPU that Airtel clocked last week. I'm trying to understand whether there's a trend over there, whether those trends will reflect on Vodafone as well, and how one looks at the competitive landscape at this point of time. Just give us a sense, first off, the 30,000 feet view.
Broadly, like ARPU is increasing because of 2G to 4G migration, increasing number of postpaid customers, and customers moving to high data packs. And we believe that this trend would also continue for Vodafone Idea. And also last quarter had one extra days, number of days, like that also led to, like, say, increased ARPU for Bharti Airtel. And for Jio, like, say, increase in ARPU was slightly a bit muted, primarily because of increased customer addition at slightly lower end of pricing. Like, so probably we expect Vodafone to report roughly close to increase in ARPU by roughly close to 1.5% sequential.
Piyush, hi. Do you see enough of a push coming from many of the telecom companies to increase the ARPU maybe going into the festive season?
Honestly, organic ARPU would continue to increase primarily because of premiumization. And with that, we can expect around, say, 5 to 6% is impact on ARPU. Like, but the real impact would come from tariff hike. So if that comes, we are building in maybe next 3 to 6 months, we can expect tariff hike of around, say, 10 to 12%. And that can drive ARPU. Like, so broadly, I would say the structural story remains intact. Like, say, key players are gaining customers along with increase in ARPU, like, and plus most of the CapEx is behind. So we should see improving free cash flow generation, and with the sector primarily getting into sort of like semi-duopoly or so, that continues to benefit Bharti and Jio. Yeah.
And how do you look at the fact that typically we have seen a recalibration of the tariffs around the festive season, and as a result of an indirect increase in ARPU, tariff that comes into especially the base packs. For the last 2 years, we have been seeing the gradual increase of the base pack. Is that the way you're going to see many of the telecom companies raising their ARPUs?
See, tariff, like say, we expect a tariff to increase more for like say higher data packs. At the lower end, tariff increase would be close to very minimum. So average would be say 10 to 12%. And see, generally, like say, tariff increase happens say every 2 to 3 years. And last one took place in July 24. So we are almost like say 2 years down the line. And so it also depends on like say when they take tariff hike, like, but that is what we expected.
Piyush, trying to understand how the competitive landscape is evolving and how are balance sheets placed to actually compete, because Vodafone now, there's a clear roadmap with regard to how cash flow will shape up for them, maybe not just for the next 5 years, but maybe for the next 15. Do you believe they can emerge as and probably even compete to become the top 2 at all, or it's a far cry?
See, Vodafone can start adding customers as they're ramping up their 4G network. But we do believe that it will be difficult to gain market share. Like, so even with customer addition, their market share, they might lose for say maybe next 1 to 2 years. But having said that, I think with this relief of this AGR dues plus, if they're able to raise their debt fund, they might be able to like say ramp up their 4G and 5G network. So they might become competitive, but it will be very difficult to, I would say, gain market share like that at the expense of Bharti and Jio.
And from a Vodafone point of view, when do you expect this entire fundraising coming into play, especially the debt fundraising for its CapEx?
See, what we are hearing is that they are in talks with the banks, and this has been going on for the last say 4 to 5 months. Now it is very difficult to say, I think, when they are able to close this fundraise, but it is very critical because because I think they would need to ramp up their CapEx to roughly around say 12 to 50,000 crore per year. And unless they're able to raise a fund, it will be difficult to get in that range of CapEx per year. Like, so a lot depends. Like, I think it is a bit uncertain, but we might see something happening say over the next say 3 to 4 months. Yeah.
Okay, Piyush, thank you so much for joining us. We'll let you go on that note, and thanks for coming and giving us that perspective. All right, completely timed out on this edition of Market Edge from Sajid, myself, everyone who puts this show together. Thanks so much for watching. Stay with us here on ET Now. More action to follow.